All right, ladies and gentlemen, I hope you had a wonderful day. It was another wild day in the stock market. We woke up to volatility with France and all of that again, only to gap down and end up ripping. And now tomorrow morning, we get the CPI, we get Jerome Powell a couple hours later in the SEP, and a lot of people are nervous about tomorrow. Now, believe it or not, I'm not going to talk about any of that on today's video. I know, it's wild. Can you believe it? But here's the good news. I will be live 1 hour extra before the bell, about 10 minutes ahead of the CPI. I will be live there with the preview, the data, and the live analysis, and then we will be live for Powell. I'm telling you, if you have seen the other SEP ones, and this is why I'm doing this, and I think you're going to like the topic of this video, but the fact of the matter is there is a lot riding on these events, and it's not as clear-cut, and just like we did 3 months ago, even if our analysis is incorrect, if you are able to interpret it live like we did, you are able to quickly make a play and pivot. So that being said, you should be there live, youtube.com/thisstockmarket. We are live Monday through Friday, 30 minutes before open. But I'm telling you, for the CPI tomorrow, you're going to want to be there. And at the very least, do not miss Powell. I'm telling you, we get like 10,000 people there on the Powell days. You are going to want to be there. So why even talk about it now when we could just get into it live? But now today, I am going to talk about exactly when to buy TLT. Yes, this is the one we have hit big trades on in the past, and literally over the last couple of years, it has become a very popular stock. Over the years, especially as we've made our plays on it, a lot of people didn't know about this, but nowadays, this thing is extremely popular, and with everybody talking about rate cuts and expecting it, there is a lot of money going into this, but if you're looking for the big moves, you are going to need to learn a couple of things, and that's what I plan on sharing today. So I'm going to go over a lot of things related to the yield curve steepening and inverting, and I'll tell you now, I have a question from the chat. We're going to go over that, but here is the deal. Any of the topics you hear in this video, if you just go and Google it, this little AI thing will tell you everything, Investopedia, it will explain it a lot. You could search the 2-year, 10-year yield curve. CNBC has a nice one, even Trading Economics, if you want to pull up all of the bonds. It's very easy to get this information. If anything is ever confusing, you could always ask me a question, but make sure you give it a quick Google and see if that could help clarify anything. But here's the deal. I have credentials to talk about this, and I want to start off with that, but also with how crazy this topic is, how crazy the past has been, the way I'm looking at it, this may be my last video on this topic. I may include it in watch list here and there, but it is up to you whether or not I make a video on this. You guys see the channel. You could like the video over the years and all the TLTs we've ever hit. All we've asked is you like the video. So if I don't see this video is really getting the engagement and y'all aren't really that involved with it, I'm just going to keep my mouth shut up until it happens, and it'll probably be on the live, and then there you go. Shout out to Stream Alerts too, but hopefully you see what I'm saying, man. If you are really interested in this and this video is helpful and you want me to keep going over it, you got to let me know somehow. Like the video, drop me a comment, share the video, baby. That is a way you could give back here, and at the same time, let me know what to talk about, especially if this is the stuff you're really trying to put your money on. So that being said, let's talk about my credentials before we get into it. Why do I think I could talk about this? Why do I think you should listen and pay attention? Because I have hit the 2 latest and largest cycle shifts relative to TLT. That any other time the yield curve went from flat to inverted and then steepened rapidly and gone back to normal and caused a big reaction, I have hit it. The only other time I didn't hit it was 2007, and that's because I was starting to get into trading. The other ones, what happened in 2019 and even in 2020, we got to hit both of those, and those were 30,000 to 50,000% plays. A lot of people get real mad about when I say this, but you could go look it up, man, and see those plays on TLT, even the 2021 specifically, that generated over $100 million for the Chad that week. Why do I say that? Because prior to ever talking about it on stream or anything, the open interest was roughly about zero. Afterwards, and after it all happened and the valuation, the market makers had a liability of around $100 million based on the open interest. So it was awesome, and we did it even about like 6 months, 9 months before that. It's funny how the events correlated, but so far throughout my trading life, this yield curve has fascinated me. I've made a lot of videos on it, and fortunately, anytime it has happened, it doesn't happen often, and that's what I'm saying, like literally 2 times in the last 24 years, or 3 times. One of them, I was too young, and I was just getting into trading, but this thing has been a major part of my life, and thankfully, I've been able to profit off of it, as well as thousands of you guys who have watched these videos. Literally, both TLTs, I put out videos. Not only do I do these trades live on youtube.com/the stock market, but I literally made one of these watch list videos in the days before all of these plays went up 30 to 50,000%. So I'm saying, man, don't gatekeep. Like the video. If you want this, then let's go. But that being said now, when do you buy TLT? And this has been a question that is plaguing a lot of people, even over the last couple of years. People have been buying it. I've had great interview guests, which I think are very knowledgeable at the topic, and they were even talking about this as well. This topic, everybody wants a piece of it. But here's the thing. The answer to this question is you buy TLT, and I'm talking about the big one. Hopefully this answer here could explain it. If you want that real big TLT move, you buy TLT when the yield curve steepens rapidly, not just steepens. So steepening will be bullish for long-term bonds, but if it just steepens and it's not a rapid steepening there and it's just little by little, that will have a temporary bullish reaction in bonds, and equities will benefit off of it as well. Believe it or not, July 23rd till today, you have had a yield curve steepener. And what does this mean now? Like I said, you could Google it, but simply the yield curve steepening, also known as a yield curve steepener, occurs when the spread between short and long-term bond yields widen. This can happen when long-term yields increase faster than the short-term yields. If that doesn't make sense, the simple way to look at it is like literally a mountain steepening, but you have to base it off the short end. It's when the curve goes back to normal that is a steepener. If it flattens, short-term and long-term rates are the same, and then if it inverts, just like it is now, short-term rates are higher than the long-term. So pretty much you could see here, you go from flat, and then what happens, you start getting steeper. That is a steepener right there. And now here's the problem. I have this chart, and this has been a mystery for a lot of people. Why do I say that? Because there has been several curve flattening and steepeners since the 80s. Even if we want to go back all the way to 1940 and 1920, you have also had very wild inversions and steepenings and all of that. And why I say wild, because how the market has played out, it has really been variable. A lot of times people say the yield curve precedes a recession. However, when you really go into the details, it's very hard to see. It's not like it gives you a clear-cut signal. Even right here, right now, over the last couple of years, a lot of people have doubted this logic because it has been multiple years of the yield curve inverting, and all you have done is hit record profits, set record highs on the stock market, and meanwhile, you even have a new bullish AI technology. So this is where you get into the nitty-gritty, and really what I think the problem is, because over the years, you have had curve steepening, but you don't always get a rapid quick adjustment to the yield curve that takes it from flat or inverted back to normal. So that is what you should be looking for when it comes down to finding your TLT play. When do you buy TLT? When the yield curve steepens rapidly. In this case, you could even take a look here. Like I said, this was the one we hit. You go from like pretty much right there at flat to quickly the yield curve goes and steepens to now 1.5. This is a normal yield curve. Again, 07, 06, you saw something there, and as the curve steepened rapidly, the market started to adjust, as did the bonds. Now, I have an old video on this, and it's very simple. I think that a rate cut is not going to be good. However, just one rate cut, that's a different story than multiple quick rate cuts or even an emergency or outsized rate cut, just like they did outside rate hikes to get us here. So hopefully that makes sense, but this concept, if you really want to play TLT and find the big one, you really have to pay attention to this. And sadly, here's the problem. Like I'm telling you, any sort of curve steepening, it ends up being bullish for the bonds there, especially with how we have traded as of late. But it often gives false signals, because if you get a steepener and then it's not rapid and then somehow it chills out just like it has done this year so far, well, then you're back to square one. You may have positioned, and then before you know it, 6 months, 1 year of time is gone, and then some of those plays, they're not going to hit the same. So this is the first thing you need to keep in mind. When do you buy it? When the curve is steepening rapidly. When you start to see the curve steepening, you should pay attention. However, if it doesn't turn into normalization, or that curve steepening does not gain big velocity, you are not going to get your big blow off top and craziness, because that is just now back to the history books, and then it's going to be harder to decipher. So hopefully you're following with me. But now the next thing you got to keep in mind is the real key in terms of finding your play. The key with TLT, when the rates get cut, it is going to boil down to your strike price if you're playing an option, or even if you're on shares or anything like that. What is your target? Like, if you're really thinking it's going to make you a lot of money, you have to ask yourself where it's going to go. Every time we made a lot of money on our TLT, it's because we bought them for pennies and then it went in the money. That means we were able to somewhat predict where the rates were going to go. Was I trying to? No, but those are the plays that are going to make you a lot of money. The problem with right here, right now, just like the way up with rate hikes, even the way down, and if you even go look at Japan and the ECB and a lot of other places right now, this strategic ambiguity used by the central banks, it is a very big tool for them. And this is why I'm saying the key is going to be your strike price. Hopefully you understand the logic here. Once again, if there is no rapid aggressive cuts would lead to a rapid steepening of the yield curve. So if you just get a rate cut and then Powell's like, yeah, we're going to wait and see, just like Japan did when they raised the rates. People thought things were going to blow up, and they said, well, we'll do it small, and then we're going to be very ambiguous on our plans moving forward to not upset anybody. And guess what? They accomplished something that everybody thought even years ago would blow up the entire market by being ambiguous and by taking it slow. So Powell could do the exact same thing, and that's why maybe we get our rate cut by the end of the year. But if it's like a one-and-done rate cut, and he's like, yeah, we're going to cut, but we don't know what's going to happen, we'll wait and see and go from there, and the economy and other things don't show it, well, sadly, you'll probably get trapped in TLT at that point, because if they cut rates, TLT will go up. But then if there's no plan of future rates, or the first cut is not rapid or based off of a reason that you can imply would lead to a rapid steepening or uninversion of the curve, TLT will go up a little bit, but it's not going to go back up to those previous highs. If you really want to see what I'm talking about, think about it. Go see where long-term bonds, 30-year, 20-year plus were at when it happened in 2020, when we made our play even in 2019. Once you start getting above like the 130s, 140s, 150s on TLT, these rates are near zero or very, very low for long duration bonds. You haven't quite seen them. So like I'm saying, if we get a rate cut, yeah, the stock could jump up, TLT will move up. But if we have no plans to get to zero, or you don't know how long it will take, some of these prices will be out of the question. If we run into an economic slowdown and something happens and Powell's like, yo, we got to cut, and we plan on cutting every single meeting, or we're actually going to do a double rate cut, and now we're worried, or if there's an emergency meeting, that's a different story. That's when TLT is going to go insane. That's when we could start looking at some of the higher prices here, but hopefully you get the point. It's one thing about just knowing what's going to happen and being informed on that, but depending on how it occurs, your price that you pick or how you position in terms of how much you want back and then the risk you're taking trying to go for the play, this has to all make sense, but it's not a golden ticket as everybody would seem, especially if Powell plays the ambiguous card. So I really hope you guys get this before I move into the final part of this. I'm going to show you a little bit of cool history things related to it, and I'm going to even give you a timeline, but please try to understand this because this will save you a lot of money if you are trying to chase this type of play. Simply, when the yield curve starts steepening, you should pay attention. If it is not a rapid steepener, there will be a limit. It is not going to be that once-in-a-lifetime move if you are not getting rapid steepening. The second part, you have to be mindful of the strike price and where you are positioning because there is a lot of uncertainty in this cycle. We don't know how Powell is going to play it, and even with some of the history, it's funny because, like, the yield curve is starting to enter some very unprecedented eras in terms of how long we've been inverted, but a lot of people are starting to say maybe that shows we're in a whole new world and things are going to be different, and it doesn't necessarily have to be bad. The point is we are on this weird trek ever since 2020. There's a lot of things that have stayed the same and a lot of things that have changed. We don't know how it's going to play out, and it's not like Powell and the Fed are going to give you that answer as easily, and the way you protect yourself, it comes down to that price and the positioning, so you are mindful. But I'm telling you, if you just keep these two things in line, you're like, hey, should I buy TLT? Oh, hey, this is going to be the big one. Ask yourself, is the yield curve steepening right now? 2, how fast is it steepening? How close is it to normalizing? And is it doing so quickly? And then, based on that scenario, does that imply that there would be a move to largely lower rates, or will it be a gradual adjustment? And even if it's going to be gradual, or if it is gradual, then you have to prepare for it not going as high as you like. You could still make money, and this is why I'm saying this, because this will be the difference between, oh, the cut happens, the move happens. Some people are still going to lose if they do not take this in mind. However, if this doesn't happen and we do get the aggressive rate cut, well, then everybody should win on that. So it's all here to help you, man. I'm not trying to talk anybody out of it, but I am hoping that you can use this to make good plays, and you got to be mindful because the thing with bonds, it is called duration risk. You may think, yeah, well, TLT will cut eventually. It'll come here and do all that. But the problem is if that takes 1 year, 2 year, 3 year, and then the bonds go even lower and lower and they still go through this downside here, you're going to end up paying for that if you don't have enough to average down or you don't follow along. And then even TLT with shares, you are paying an expense fee to hold that. There is risk the longer it takes to happen if you are solely investing on the basis of a readjustment in the value of those bonds. So hopefully you all take this into heart now. And now here's the last piece. Why am I bringing this all up? I've been talking about this a lot, even as we get into the end of the year. There's been a lot of back and forth. We even got Powell tomorrow, but this whole idea of soft landing, no landing, hard landing, and the probabilities going back and forth right now, it's like a 5 or 2% probability of a hard landing. Everybody is on the soft landing camp. My problem with that is that 9 of the last 10 major recessions, everybody thought there was going to be a soft landing, and the Fed was not able to engineer it. The Fed has a really bad track record with this. Now, granted, maybe this is new, maybe it's different, but here's the other part. The yield curve has been inverted now for over 2 years. I made that video when it was already like 8 months in or something, and I was like 12 to 18 months. Well, I said that because on average from like 1920, you don't really see the yield curve inverted that long, but now, today, we have broken records. We are now inverted longer than even 1920, and that's why I'm saying with these next 6 months, the potential for the odds to shift, the election, this yield curve, unfortunately, I can't ignore it. It is hard for me to shake this belief that it's nothing, especially when there's a lot of history behind it. So here's the deal. I'm going to show you this chart, and it might make sense, but I don't know when this is going to uninvert and be a rapid steepener. I don't know when that major move will occur. A humbleness towards this will keep you safe. Trust me. It will protect you from duration risk. You've seen all of the steepening, but it wasn't rapid, and bonds got bullish, and then they faded. So the deal with this, you don't need to know, and relax a little bit. Trust me on this, because you will know it when you see it. Every single one of our TLT plays, even if you did not watch the watch list, even if you were not prepared, you are still able to get in within the next couple of days at a fairly decent price. Obviously, the early people got rewarded, but it's not as if the play became unattainable just because you were behind on it. And this is kind of the weird allure to TLT, because it draws in a lot of people who want to be early, but even if you are late to it, you could still make a bag, especially if one of these things that doesn't really happen too often ends up happening. So you will know it when you see it, but I'm giving you a time frame, 5 more months from here. I know it's weird, but why do I say that? And I don't know. Like I told you, I said it's 16, 18 months from that one moment, and now we've gone beyond that. And for me, that was a bunch of flashing lights, but I've always said this in the past, and I wait for the steepening. I've said this even in my videos 5-6 years ago, because if you see the yield curve invert and you're like, oh man, this is bad, I got to sell out everything, you would have literally missed out on one of the biggest rallies. Again, that whole July till now, it's actually, where's that other chart? But like, think about it, man, that curve, that steepening that we just got from July, dude, that was the biggest rally that we have ever had in the history of the market. Yeah, we dropped for a little bit, but that whole October all the way till now, or until we ended that 20-something weeks, that was one of the biggest rallies ever. So if you didn't get into that because you're like, oh, the curve is inverted, this is where the yield curve has frustrated a lot of people. That's why I'm saying, even then, I believe there will be a hard landing. I still believe in it, even though it is a lower possibility. I think we will get a rapid curve steepening eventually, and I don't know when, but the point I'm saying is that even with that belief, I'm not selling my long term. I'm not hiding from the economy. I'm living my life as I would normally, because like I'm saying, you'll know it when you see it. And until there is that decisive move, it doesn't necessarily doom the economy and market to hell. It is the rapid steepening and uninversion after being inverted. That's where you notice it. And if you want to know why, the answer simply is because once you start getting a rapid adjustment to bonds, that's usually what the Fed does if they are worried about the economy or demand. And that's what I truly believe. And I believe once they show that concern, you will have your answer. But here is the other thing I'm telling you, what's even sparking this and why I'm talking about it. And I'm even telling you, ironically enough, it's June. I'm telling you 5 months out is your window to keep an eye on certain things. And it doesn't mean this will happen. But what I mean in this 5 months is that now, after 5 months, which is ironically the election, you will have every single part of the yield curve inverted for the most it has ever been in history. Yes, so here's what I'm trying to show you. That whole 2s and 10s, we have now hit the longest. Again, that 23, that was the inversion from 1920. That was the whole Great Depression. We are now past that. The 2s and 10s, that is the main one that I use. But even the 3-month 10, current streak is now 20 instead of the previous of 19. The 5-year, 10-year, this one has only been inverted for 3 months. This is why I'm saying 5 months out now, you will simply get to the average, but then you would actually need around, 24 months, another 2 years. And sadly, if that's what it will take, I mean, my goodness, but that's in the possibility realm. That's what it would take you to get to the longest inversion. But then go to the 3-month 30-year. It's currently the longest it's ever been. And then same for the 2-year 30-year. Or again, in 5 months, you will now start to breach that. So what I'm saying here is that a lot of the curve now is starting to flash these signals, meaning you have had inversion for this long. That doesn't really indicate a healthy system. Somebody asked me about this the other day, and they're like, well, can't this be the new normal? Doesn't it mean all of these things? But I just said, listen, until mother effers start acting on this, until people and banks start giving you loans for less interest the longer you borrow, nothing about this is normal. I don't think you're going to ever get away from that reality. It does not make sense to loan out money for 30 years at the same rate you would for 2 years or for 3 months. That means there is something being finagled with and there is a problem. It doesn't mean it's a problem that is going to blow up the car, but the check engine light is definitely on. I know back from the Honda days, baby, you could drive with that check engine light for a very long time. You see what I'm saying? And sometimes it leads to something, sometimes it doesn't, but that's what we're kind of waiting for. When does the Fed say, yeah, we got to take this into the mechanic? And now here's the other part. Think about the stuff I've told you guys, like 10, 18 months, 12 months, all of that. Here are the averages of how long they have stayed inverted before reverting back to normal. So not only are we hitting the highest elements, but compare it to the averages on every single metric except the 5-10 year. That's why I'm saying 5 months from now, we're going to get a couple more changes here. These are the only ones that are right now below their average, but it's kind of crazy to think about, because now, or maybe worst case scenario, 2 years from now, we could still survive like this. And now it's going to go from, the longest it's been inverted on the 2 years and 10 years to no, dude, it's about to be the longest the whole entire yield curve has been inverted on almost every duration. And that's mind blowing. So point is, we are entering a critical moment. Yes, there will be the election and all of that. And I want you to pay attention for it, but I don't this video shouldn't hurt you, because like I'm saying, if these two conditions aren't met, bro, you better be patient, and the market could rip while you are being patient. So, Chad, I hope this keeps you safe. I hope this helps you out. And then now, I got the final question. This was from the Chad who asked me earlier today. I don't know if you guys could see it fully. I wanted to use this different setup today. Oh, it's in viewer mode. Hold on, I got to edit it. But yeah, I wanted you guys have, because I didn't want to switch between screens and end up losing it. But they asked me, they say, Josh, I'm getting confused then when we need to move forward with TLT. I'm holding 500 shares of TLT, but I've been swinging it. When you say the curve is unraveling, does that mean it is going up or down? So this was the question I got today. And sadly, I had to time homie out, because he was asking me about the hard landing and then asking me about the yield curve. And then I was answering those questions. But then sadly, he just saying, so buy TLT. So it has TLT. So then this, and unfortunately, this is why I was like, man, come on, you got to, it's sadly, and this is why I'm even making this video. It's not just for you. And I shout out to my boy, man. I'm glad that you followed up with me, and I hope you see, I want people to really benefit off of this stuff. But the point is, it's you guys cannot simplify it to just, buy TLT and we're going to make money. Oh, yeah, simple rate cut. It's like, no, there is all of these other factors. And I will tell you, if you actually care about this and to the point where you want to put your money down, you will benefit off of this. You will get prepared. But this whole idea of rate cuts and then simple buy TLT, that may get you far at one moment when the real big steepener happens. But in the meantime, it is going to lead you down a road of getting trapped into duration risk. So point is, you guys have to be very careful with these TLT plays, and everything about rate cuts and all this. It doesn't immediately say you should go be buying this. You have to understand what the yield curve is, why it's weird that it's inverted, how it's happened over history, the Fed's link to it, and aggregate demand. And that's why I'm bringing all of this stuff up. And that's where you start to really understand, there's a lot going on, and it really tells you a story beyond just, this action is going to happen and then boom, it's going to rocket to the moon. Has that happened and have we hit it? Yeah, but there was a lot more that went into it, and just sadly, I wish it was as easy as the last times, because, we would have all been loving it. It would have been easy. I could have done all the work for you, man. But unfortunately, right now, in this ambiguous nature, in this environment, the fact that we are about to go over the edge of the whole entire yield curve, reaching a point that has never been this inverted for this long, there is a lot more to it, and I've just seen it year after year. It's trapping people, and if you're only focused on buy TLT, you're going to miss a lot of the info that I think could prepare you for like 5 other plays as well. So that being said, when we move forward with TLT is when you get a rapid curve steepener. And like I said here in the beginning, if you ever hear anything that doesn't make sense from me, just Google it. If it is a financial term like ghetto spread, maybe that one won't come up, but I don't know. Does it come up? Someone tell me. But the whole point is you could figure this out, and it's simply the curve going from inverted to back to normal. And that's what I'm looking for. Right now, TLT is inverted. Short-term rates are higher than long-term rates. If you go and look, this is a 2-year bond. It's at 4.83. The 10-year bond is at 4.4. And like I'm saying, you got to see why this is weird, because somebody will charge you more money to borrow money for 24 months rather than 120 months. That's weird. Literally, it's cheaper to borrow for longer out. That is the problem that we have here. That is an inverted curve. The short end is higher than the long end. What I am looking for is for the short end to go lower than the long end, and this is why I'm saying, like, what if people are right? What if they're like, yeah, well, we're living through a new world and it's about to be a new world. What if Powell normalizes the curve without having to cut rates as rapidly, or if at all? So you got to think about it. I'm telling you, yeah, if they cut the rates and the long end stays the same, the curve will normalize. Short rates drop below 4.4. Boom, we're back in the game. Curve is steepened and it's back to a normal or flat position. Flat's is not as good, but is better than inverted. That would be great. But also, what happens if the rates stay the same over the next, like I'm saying, maybe 24 months, maybe the next 5 months, but then the long-term rates shoot up? What would happen? The curve would normalize. The curve would steepen. If the 20-year, 30-year bond shoots up to 5% right now and the 2-year stays at 4.5-ish, my brother, you now have short-term rates lower than long-term rates. But what is the problem? If you bought TLT, you're paying for that, because if the long-term rates go up, TLT is going to be going down. And that's where I'm saying you got to be careful, because there's many ways that this can occur. Yes, in theory, when we're like, boom, just wait for this, it'll be easy when you see it, but that'll be a lot of hindsight. But leading up to it and how it plays out, especially if you're trying to play it, and with how the Fed has been, that will be a lot more difficult. So, like I'm saying, there is many ways that this can happen, but there's no big TLT play until you get this normalization. So I think TLT will move, like I'm telling you, any sort of steepening, just like we saw in July. And like, what does that mean here? Like, think about it. The last couple of months here, you could have the curve kind of like chill out. If you go and see the bonds, you'll see it even a little bit more. If the bonds start to catch a bid and go from deep negative to less negative, that will be bullish for bonds and equities, but it's not going to give you the rocket ship move you're looking for, because it was not rapid. And then usually if it's not rapid and then you spend another 6 months, it starts to go down again. So I like the idea of swinging the bonds, but if you're doing it with this secret intention of hitting the big one, you got to watch out for duration risk, because like I'm telling you, what happens if the long-term rates do go up and you're in TLT, and yeah, it may lead to that steepening, but now you have to pay for it. Or if you're like swinging the bonds like, oh, well, I'm just waiting for the big one. Oh, no, I'm only doing this. But then before you know it, you'll spend a lot of money on the fees. The stock could keep going down. And then even at that point, if you position 1 year and it goes lower, and then it even has one of the smaller pops because it's not a rapid steepener, you're just going to come back to break even. In a weird way, you could just collect more yield by buying an actual bond. So you got to keep this in mind, because this is that duration risk. And the longer it takes for a rapid steepener to occur, or anytime the curve steepening starts to fade away, the lower TLT will go. And so it's one thing if you're trading options, but even if you're trading the shares, you are getting hurt either way. So hopefully this answers everything. When do we move forward with TLT? When this 2-year, 10-year goes to 0 or higher. that is now game on. Once we uninvert and normalize, that's the real big thing that I am looking for. That will be your game time signal. But in the meantime, once we start doing any sort of our steepening here, again, this was like your June, July one that you had here, that is going to cause a certain amount of effect on the market. But if it doesn't lead to normalizing and the curve going back to normal, this going back to zero, then it may very well fade, and it does not indicate that we will get the big move. So I hope you guys are feeling me on this, because I'm not trying to tell you to not go for this, but I'm telling you to investigate, and you know the clue that you need to look for. And if this curve is not doing all of that and we are still playing this waiting game, we've been through so much over this last year or two with the Fed. I hope it has taught you so far, but the point is a lot of people are going to be going for this, but the real move happens. And a lot of people on Wall Street know about this. This is not this rapid curve steepening. There is a lot of people who are aware of this, and that's why I'm saying I don't want you guys moving through these plays, and then don't trick yourself. And like I'm saying, do not say, oh, well, yeah, I'm just going to play it. But this was like, yo, if your real intention is going for the big one, go for the big one, but you got to hunt for it. And you got to make sure that the evidence is there. And that's all that we're looking for. So the point is, we're entering a pivotal moment. It's already been a long time. It has fully captured my attention, but we have to have a weird tenacity towards it, while at the same time not being too jumpy, especially if the conditions aren't met. And here's the deal. If you play it later when it's actually confirmed, you will not lose as much and probably make more than trying to front run it before any of these conditions are met. So, Chattadonia, I hope this helps. I hope I see you guys tomorrow for the big day today. And that is your watch list, ladies and gentlemen. Make sure hydrate, healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. And I need you to remember, baby, keep that heart full. Your own ideas, thoughts, desires, baby. That's what keeps you full. Have it focused, single-mindedness on the goal, the mission. Watch out for the undividedness. Watch the purity. It don't matter if you change the principles or the pipes, if the reservoir is contaminated. Oh, my gosh, and keep the peace so we keep moving forward, baby. But I love you. Drink that water. Stay hydrated and healthy. All that good stuff. I'll see you in the morning. And horn.